Back in live, right?
Yeah, I see the stream live on YouTube.
Okay. Sorry, folks. Actually, there was a little mistake. Wife, she is trying to. She thought the router and the TV both little box look like same, so she was trying to reboot. So she unplugged that one by mistake. All right, market 2 o'clock right there. 159 market is going boom, boom, boom. Look at that, flying high. Okay, ticks are turning now.
Still not trading, right?
Me, no, not yet.
Oh, this data is so high too. It's like, how do you even trade this?
That's the game, man. Let's see now. Okay, 220. 169.
Well, it's coming.
QQQ going down crazy. They move around big. QQQ is moving crazy. They move around big.
Crazy candles, huh, Josh?
Yeah. That's the game, but that's the game.
I'm 100% profit riding the bench today.
What did you trade it?
100% profit riding the bench.
Riding a bench. Okay, gotcha.
RTB.
Mm-hmm. So this is 405 and 402. They look at this big candle. Can you believe the size of the candle they did this? Now that's what they're gonna play today. A little bit up and down. Big candle played.
That's why you don't have stop loss right there.
Yeah, they do everything. 20% off. Four, two, seven. Let's see Apple, what Apple doing.
Yeah, the minutes say Fed slows rate hikes signals further increases are coming.
Mm-hmm.
Raises rates 25 BPS.
Yep, 25 BPS.
And 25 confirmed.
Mm-hmm. That's what he said.
Yeah, in the minutes. Yeah, they just released. But we're not surprised. We knew this was coming.
Mm-hmm.
Carvana up 10%.
Right now, whatever is going on, we need to wait. $2:30 we'll bring the Jerome Powell here live. So until then, we just need to watch all the candles, see what the market is doing. Slowly taking it up. Yep, absolutely. All the stock is going up. Man, still SPX is a crazy premium, man. Wow, look at that. Look at that. 185. 160. Squeeze building in, yeah. Big swing.
SPY premium has cooled off a little bit.
Yeah. That's bullish right now. MACD is bullish. Jerome Powell comes in at 2:30. We'll wait for 2:30. See what happens.
What's up, Josh? I just wanted to ask, do you have any opinion on like the data that came out, like whatever the leak stuff from the whale accounts or whatever, just the initial stance on it, the hike and whatever, and Fed funds and stuff, or
Later stage, man. I mean, focus on trade actually right now. Looking at every candle, but yeah, we can talk after 4 o'clock. Absolutely, not too disrespectful, but just trying to focus on that. Yeah. Dow is down. Can you believe it? Nasdaq is up, folks. Can you believe Dow is down? Nasdaq is up. S&P 500 is little down still. Okay. So Caterpillar is down, right? Nasdaq, Dow is down. That's why Dow was up. Now Dow is down. Mm-hmm.
AMD is up.
Oh yeah.
It's pulling back now, but yeah.
SOXL.
Tesla's going down too.
Mm-hmm. Hey Josh, good morning. What are these right here? Okay, now market found a resistance that area, folks. Okay, looks to me. Okay. SPY 85. Squeeze building in. Now market gonna wait for Jerome Powell to come and talk and compress like this. So people who are holding puts here, they'll be waiting for this, right? Like that. Yeah, we just need, they do compress now. Looks like to me, green, red, like that. Let's see. Look like the one. $0.90. Viewer page right there, 90 cents. I'm in a put 402, 92 cents. But we are in a very, the price of control area go. Right there. Ticks are turning now. Still above the cloud, we're in a bull territory. Interesting. No wonder. VWAP is right there. We're gonna bounce. Ticks is going up. You see that? They want to go north. We have resistance to watch. Market wants to break the VWAP. Ticks to watch. Excuse me. QQQ going up. Price of control area is right there. Still we are in the bull territory. Bids coming in a long side. Price of control area ticks are turning positive. This is rebounding right here, sloping support. Got to exit my position. Price of control area, see what does that. I need to see. That's my entry from there. Okay. So market is doing like this right now. Ticks are still going positive. They're gonna just compress out here until the Jerome Powell comes. Stay in the middle. That's what they will do. Keep it in the middle until the guy comes. MACD looking super bearish. But we are in a bull territory. One. All the EMAs are jumbled up, waiting for the Jerome Powell to come and speak. You follow? That's what he's doing. For 6 more minutes to go. So they're gonna compress out here. 6 more minutes to go. All the EMAs are jumbled up right there in the one spot. Anywhere, any direction can shoot. I'm still in put, but yeah, I'm trying to exit. I just needed one push I had a 20% profit, 22% couldn't exit, but I wanted to take the profit. Squeeze building in. Let this go back to this. I can. MACD is in this. Boom, boom, boom. 110.
There's a lot of bids out there though.
Yeah, but this you gotta be quick here. This is the FOMC, man. If you become 1 second late, everything is late. Everything is late. You gotta put the price. $21.10. Just now touched to 109 and then took a U-turn. MACD is still. They're showing you some weakness, but it's pointless, man.
Bring the meeting at 2:30.
Yeah, 2:30 meeting starts. I'll be streaming. I'll bring it. I'll bring the Jerome Powell here. Your sound is in and out, man. 108. $1. Price of control area. Takes a turning positive. One more minute to go. $1. $106. $110. I'm out. Executed.
trading, Josh?
It was
Yeah.
the put before, right?
Yeah, I said that I bought a put 92 cents. So it's just a 20% profit, made a little bit. When was rejection coming in right here, broke the price of control line, I bought a put right here. Price of control line was breaking. I said maybe they're gonna go down. They went here, but then bounced. So I was holding on 12 minutes. Okay, let me bring this Jerome Powell coming.
Book unforgettable travel experiences at Get.
Hold on, advertising coming in. Okay, ticks are turning. Okay, I could have hold it right here. It's Jerome Powell coming in a few minutes right there. You see that? So let me, quality has to bring it down, way down, folks. Okay, because otherwise we'll be in trouble. Okay, right here. Okay, so let's see what market does it here. Jerome Powell is, when comes in, we would know. Okay, MACD entering into bear territory right there. Market is selling off.
Good afternoon and welcome.
Oh, champion is here.
My colleagues and I understand the hardship that high inflation is causing, and we are strongly committed to bringing inflation back down to our 2% goal. Over the past year, we've taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground, and the full effects of our rapid tightening so far are yet to be felt. Even so, we have more work to do. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by 25 basis points.
I mean, the put $1.46 and 402.
Ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, we are continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive stance for some time. I will have more to say about today's monetary policy actions after briefly reviewing
172, 175.
The U.S. economy slowed significantly last year.
$1.72, I'm out.
Rising at a below-trend pace of 1%. Recent indicators point to modest growth of spending and production this quarter. Consumer spending appears to be expanding at a subdued pace.
I'm scaling small profit.
Reflecting tighter financial conditions over the past year. Activity in the housing sector continues to weaken,
Oh, wow.
partially reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very high, and
This
wage
is support,
growth.
major support. Now
Job
once
gains
break
have
that, I
been
will enter.
robust, with employment rising by an average of 247,000 jobs per month.
This
over
could
the
be a
last 12
bounce.
months. Although the pace of job gains has slowed over the course of the past year,
Already.
and nominal wage growth has shown some signs of easing, the labor market continues to be out of balance. Labor demand substantially exceeds the supply of available workers, and the labor force participation rate has changed little from a year ago. Inflation remains well above our longer run goal of 2%. Over the 12 months ending in December, total PCE prices rose 5.0%. Excluding the volatile food and energy categories, core PCE prices rose 4.4%. The inflation data received over the past 3 months show a welcome reduction in the monthly pace of increases. And while recent developments are encouraging, we will need substantially more evidence to be confident that inflation is on a sustained downward path. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that's not grounds for complacency. Although inflation has moderated recently, it remains too high. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 25 basis points, bringing the target range to 4.5% to 4.75%. And we are continuing the process of significantly reducing the size of our balance sheet. With today's action, we have raised interest rates by 4.5%.
Caterpillar broke the floor.
We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. We are seeing the effects of our policy actions on demand in the most interest-sensitive sectors of the economy, particularly housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee decided to raise interest rates by 25 basis points today, continuing the step down from last year's rapid pace of increases. Shifting to a slower pace will better allow the committee to assess the economy's progress toward our goals, as we determine the extent of future increases that will be required to attain a sufficiently restrictive stance.
I mean, for call 74 cents I paid 408.
Taking into account the totality of incoming data and their implications for the outlook for economic activity and inflation.
Supply is right here.
We've been taking
I'll
first
exit
steps
here.
to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring
98,
inflation
$1 I
back
need.
down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation
Magdy
is likely
crossing.
to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for
Oh wow,
maximum
look at that.
and stable prices. over the
113,
long
150.
run.
Woohoo!
The historical record cautions strongly against prematurely loosening policy.
Okay, I'm
We
out.
will stay the course until the
$1.12.
To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Chris Rugaber, the Associated Press. Thank you for doing this. As you know, financial conditions.
This was a good move, folks, right here. This one. I was waiting here. This was beautiful. 50% move. 50% profit.
And the stock market posted a solid gain in January. I think your job of combating inflation.
Look at that. Draw the support right here. 2-time trade. And 1-time trade here, but this was the best one.
Or to offset the easing of financial conditions.
So it is important that overall.
Yep, market wants to break today's high, folks. Look at that. Yep, they want to go north.
In order to bring inflation down.
Boom, boom, boom.
And of course, financial conditions have tightened very significantly over the past year. I would say that our focus is not on short-term moves, but on sustained changes to broader financial conditions. And it is our job.
I'm in the same trade, $1.18.
Which is why we say that
408
ongoing
call.
hikes will be appropriate. Of course, many things affect financial conditions, not just our policy. And we will take into account overall financial conditions along with many other factors
140.
as we set policy.
108.
Hi, Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post. over the last quarter, we've seen a deceleration in prices,
$1.50. Give me one.
in consumer spending, all while the unemployment rate has been able to stay at a historic low. Does this at all change your view of how much the unemployment rate would need to go up, if at all, to see inflation come down to the levels you're looking for?
150.
So I would say it is a good thing that the disinflation that we have seen so far has not come at the expense of a weaker labor market. But I would also say that disinflationary process that you now see underway is really at an early stage. What you see is really in the goods sector, you see inflation now coming down because
Rejection right there.
supply chains have been fixed. Demand is shifting back to services, and shortages have been abated.
Trying to exit $1.50 if I can get it, man. It touched down to 145.
In the housing services sector,
Oh,
we
yes.
expect inflation to continue moving up for a while, but then to come down, assuming that new leases continue.
150.
So in those two sectors, you've got a good story.
155, I'm out.
The issue is that we have a large sector called non-housing service, core non-housing services, where we don't see disinflation yet. But I would say that so far, what we see is
31% profit.
without any weakening in labor market conditions.
We are going to hit probably 410 today, looks like. All right, RL is looking nice.
We're going to write down these forecasts at the March meeting, and we'll see at that time. I will say that it is gratifying to see the disinflationary process now getting underway.
Look at that.
Continue to get strong labor market data. So
They're using Apple.
but, we'll update those forecasts in March.
Look at that, Apple. Remember what I said they're gonna using as the volume button, this one? I said we're gonna play it when the Jerome Powell. Yep, right there. Look at that.
Let some of the air out of the labor market without major job losses.
Beautiful.
So opposite in the December jolts this morning, job openings actually rising. That also has coincided with slowdown in wage inflation. Do you believe that openings are an important indicator to be studying to understand?
Folks, watch out, okay, now? Long side, I'll be a little bit watch out.
You're right about the data, of course.
408.
We've seen.
There's a support.
And now
Anybody
Where-
traded, folks, here?
abating a little bit.
Yeah, I hit it.
Off of their 6 months ago, more
Look at that,
steady
man.
levels that are fairly elevated. The job openings number in JOLTS has been quite volatile recently. And I did see that it moved back up this morning. I do think that it's probably an important indicator. The ratio, I guess, is back up to 1.9 job openings to unemployed people who are looking for work. So it's an indicator.
Now we need to preserve what we made.
Wages moving down.
Exactly. See, this is how it works. It takes folks 10 minutes, 30 minutes, job done. You don't need to trade in the morning, right? What happened morning?
And quits are still at an elevated level. So
That's the game.
many indicators
That's the game.
are still very strong.
I caught the short side, but I didn't do the long side. But I'm all profit right now.
Good, good, good.
Colby Smith with the Financial Times.
They're gonna touch 4 or 410. I feel like that.
December meeting. Is the trajectory for the Fed funds
Look
rate
at that,
increase
man.
in
These people have a power.
still the best guidepost?
I want to wait and see for a rejection or something.
Or does
88
ongoing
cents.
now mean more than 2 rate rises now?
So you're right. At the December meeting, we all wrote down our best estimates of what we thought the ultimate level would be, and that's obviously back in December. And the median for that was between 5 and 5.25%. At the March meeting, we're going to update those assessments. We did not update them today. We did, however, continue to say that we believe ongoing rate hikes are appropriate to retain.
So 410, they're gonna touch today. Look like.
Stance of policy to bring inflation back down to 2%.
Told you in the morning, right?
We think we've covered a lot of ground, and financial conditions have certainly tightened. I would say we still think there's work to do there. We haven't made a decision on exactly where that will be. I think we're going to be looking carefully at the incoming data between now and the March meeting and then the May meeting. I don't feel a lot of certainty about where that will be. It could certainly be higher than we're writing down right now. If we come to the view that we need to write down to move rates up beyond what we said in December, we would certainly do that. At the same time, if the data come in the other direction, then we'll make data-dependent decisions at coming meetings, of course.
Quick follow-up. How are you viewing the kind of balance of risk between those two options of the likelihood of maybe falling short of that or going beyond that level?
I guess I would say it this way. I continue to think that it's very difficult to manage the risk of doing too little and finding out in 6 or 12 months that we actually were close.
What is 25%, Josh?
Nice.
To go back in, and now you really do.
I'm waiting for something proper because overextended now. Target is right here, but you never know when they do it.
It's dumping now. It's
No
dumping.
incentive and no desire to overtime.
EMA might cross here.
Look at the VIX is dropping big time, VIX.
Good certain inflation
Okay,
is coming
rejection
back
coming
faster
in.
than we expect, then we have tools that would work on that. So I do think that in this situation where we have still the highest inflation in 40 years, the job is not fully done. As I started to mention earlier, we have a sector that represents 56% of the core inflation index where we don't see disinflation yet. So we don't see it, it's not happening. Inflation in core services ex housing is still running at 4% on a 6 and 12 month basis. So there's nothing happening there. In the other two sectors, representing less than 50%, you actually, I think, now have a story that is credible, that's coming together. Although you don't actually see disinflation yet in housing services, but it's in the pipeline, right? So for the third sector, we don't see anything here. So I think it would be premature, it would be very premature to declare victory or to think that we've really got this. We need to see. Our goal, of course, is to bring inflation down. And how do we get that done?
I played strangle,
Many factors drive
means
inflation in that
put
sector.
and call side
And
just
they
to
should be
tie out. So either one direction goes, you can lose everything. In one direction, you can go crazy. Man, but it was just a small position. Man, crazy, man, I'm telling you.
Howard Schneider with Reuters, and thanks to
So if I minus my loss of that put, call is printed almost 150%. Put washed out, call printed.
That's new. You've taken out references to the war in Ukraine as
Yeah,
causing price.
150%.
Taken out references to the pandemic. You've eliminated all the reasons that you said prices were being driven higher. Yet that's not mapping to any change in how you describe policy. We still have ongoing increases to come. So I'm wondering, why is that the case? And does it have more to do with uncertainty?
Wow, look at the market, 410. Can you believe it, folks? That's what before Jerome Powell comes, I said, man, these people are going to go and test the 410.
I guess I would say it this way.
Look at that. They really did that, huh?
I think for the first time that the disinflationary
Amazing.
process has started.
Man,
We
amazing.
see it really in goods prices so far. Goods prices is a big
I'm about
sector.
to close my
This is
strangle,
what we thought
$2.
it was
Yep,
at the
look
very
at that.
beginning, and now here it is actually happening, and for the reasons we thought. It's supply chains, it's shortages, and it's demand revolving back towards services. So this is a good thing. This is a good thing. But that's around a quarter of the PCE price index, core PCE price index. So the second sector is housing services, and that's driven by very different things. And
I closed my strangle at $2. 74 cents I purchased it. Closed it at $2. Then I took the put loss, which is 11 cents profit. 11 cents. I mean, it's 9.
And we do assume that. So we think
85%
that's
loss
sort of in the pipeline.
on a
We
put
actually
and a
see disinflation
call side,
in the goods
300%.
We see it in the pipeline for two sectors.
So my total profit is almost 150.
This is good, and we note that when we say inflation is coming down. This is good. We expect to see that disinflation process will be seen, we hope soon, in the core goods the core services ex housing sector that I talked about. We don't see it yet. It's 7 or 8 different kinds of services. Not all of them are the same, and we have a sense of what's going on in each of those different subsections. Probably the biggest part of it, probably 60% of that is research would show is sensitive to slack in the economy, and so the labor market will probably be important. Some of the other ones, the labor market's not going to be important. Many other factors will drive it. In any case, we don't see disinflation in that sector yet, and I think we need to see that. It's the majority of the core PCE index, which is the thing that we think is the best predictor of headline PCE, which is our mandate. So it's not that we're neither optimistic nor pessimistic. We're just telling you that we don't see inflation moving down yet in that large sector. think we will fairly soon, but we don't see it yet. Until we do, I think we see ourselves, we gotta be honest with ourselves, we see ourselves as having perhaps more persistent inflation in that sector, which will take longer to get down. And we're just gonna have to complete the job. I mean, that's what we're here for.
Nick Timmeros, the Wall Street Journal. Chair Powell, you observed several years ago that we learned we can have a low unemployment rate without above target inflation. We have learned lately that inflation can come down from its uncomfortably high level despite a historically low unemployment rate. Given that, and given how much you did over the last year, why do you think further rate increases are needed? Why not stop here and see what transpires in the coming months before raising rates?
So we've raised rates 4.5 percentage points, and we're talking about a couple of more rate hikes to get to that level we think is appropriately restricted. And why do we think that's probably necessary? We think because inflation is still running very hot. We're, of course, taking into account long and variable lags, and we're thinking about that. The story we're telling about inflation is, to ourselves, and the way we understand it is basically the three things that I've just gone through a couple times. And again, we don't see it affecting the services sector ex housing yet. But I mean, I think our assessment is that we're not very far from that level. We don't know that though. We don't know that. So I think we're living in a world of significant uncertainty. I would look across the spectrum of rates and see that real rates are now positive, right, by an appropriate set of measures are positive across the yield curve. I think policy is restrictive. We're trying to make a fine judgment about how much is restrictive enough. That's all. And we're gonna, that's why we're slowing down to 25 basis points. We're gonna be carefully watching the economy and watching inflation and watching the progress of the disinflationary process.
Many of your colleagues discuss the conditions for a pause at this meeting this week.
You'll see the minutes will come out in 3 weeks, and we'll give you a lot of detail. We spent a lot of time talking about the path ahead and the state of the economy, and I wouldn't want to start to describe all the details there, but that was the sense of the discussion, was really talking quite a bit about the path forward.
Hi, Chair Powell. I wanted to ask about the debt ceiling. Given that we've now hit up against it, I was wondering if the U.S. goes past the X date, will the Fed do whatever the Treasury directs as it relates to making payments as the fiscal agent, or will it do its own analysis of any legal constraints?
So your question is, say your question again?
Will the Fed do what Treasury directs as it relates to making payments, or will it do its own analysis of any legal constraints?
So you're really asking about, you're asking about prioritization, in fact.
Yes,
okay.
yes.
So
I'm in a put
I feel like
406, 35 cents I paid.
And that is for Congress to raise the debt.
I put my some percentage of profit. Even if they wash out, I'll be all right.
And any deviations from that path would be highly risky, and that no one should assume that the Fed can protect the economy from the consequences of failing to act in a timely manner. In terms of our relationship with the Treasury, we are their fiscal agent, and I'm just going to leave it at that.
Are you actively doing any planning of what might happen in the event that would happen?
I'm just going to leave it at that. This is a matter that's to be resolved between, it's really Congress's job to raise the debt ceiling, and I gather there are discussions happening, but they don't involve us. We're not involved in those discussions, so we're the fiscal agent.
Gina Smiley from the New York Times. Thanks for taking our questions. I wonder, was there any discussion today of the possibility of pausing rate increases?
Everybody want to pause, huh?
Logan from the Federal Reserve Bank of Dallas seemed to suggest that would be a possibility in a recent speech, and I wonder if that view is broadly shared on the committee.
So, the committee, obviously, did not see this as a time to pause. We judged that the appropriate thing to do at this meeting was to raise the federal funds rate by 25 basis points.
Not to pause.
To anticipate that ongoing increases in the target range will be appropriate in order to attain that stance of sufficiently restrictive monetary policy that will bring inflation down to 2%. So that's the judgment that we made. we're gonna write down new forecasts in March, and we'll certainly be looking at the incoming data as everyone else will.
Clear. I mean, would it be possible to take a meeting off, for example, and then resume? Could you, rather than just doing that,
MACD trying to, let's see now what happens here.
more slowly, take some gaps in between moves?
I think this is not something that the committee is thinking about or exploring in any kind of detail. In principle, though, we used to do was go every other meeting, if you remember, 25 basis points, and that was considered a fast pace. So I think a lot of options are available, and you saw what the Bank of Canada did, and they left it that they're willing to raise rates after pausing. But this is not something that the Federal Open Market Committee is on the point of deciding right now.
Steve Leisman, CNBC. Mr. Chairman, the SEP has the PCE inflation rate in 2023 at 3.1%. Meanwhile, the 3-month annualized PCE is 2.1%, and you've achieved this without going to your
MACD crossing
funds rate, which is what you have penciled in for this year. And you've also achieved it without the 1 percentage point increase in the unemployment rate, which you have penciled in for this year. I'm wondering if you've considered the idea of whether or not your understanding of the inflation dynamic may be wrong, and it's possible to achieve these things without raising rates that high, and also without the surge in unemployment. And specifically, I wonder if you might comment on the speech given by Vice Chair Lael Brainerd, who said, to the extent that inputs other than wages may be responsible in part for important price increases for some non-housing services, an unwinding of these factors. In other words, it may not be wages, the idea that it may not require unemployment rising to get this sector of inflation under control. Thanks.
So a couple things. First, on the forecast, you're right. If you take very short-term, three-month, say, measures of PCE, core PCE inflation, they're quite low right now. But that's because it's driven by significantly negative readings from goods inflation. Most forecasters would think that the significantly negative readings will be transitory, and that goods inflation will move up fairly soon back up to its longer run trend of something around 0, something like that. So a lot of forecasts would call for core PCE to go back up to 4% by the middle of the year, for example. So that's really where the sustainable level is more like at 4%. So that would suggest there's work left to do. Let's say inflation does come down much faster than we expect, which is possible. As I mentioned, obviously our policy is data dependent. We would take that into account. In terms of the core non-housing services, as I mentioned earlier, it's a very diverse sector, 6 or 7 sectors, and so sectors that represent 55 or 60% of that subsectors of that sector we think are sensitive to slack in the economy, sensitive to the labor market in a way. But some of the other sectors are not. And for example, financial services is a big sector that's really not driven by labor markets, wages.
If you would have bought the Apple here,
so that's why I say
33% profit, around 30% profit you could have gained here doing this process. Can you imagine?
And transportation services is going to be driven by fuel prices, for example. So there are lots of things in that mix that will drive inflation. I would say overall, though, my own view would be that you're not going to have a sustainable return to 2% inflation in that sector without a better balance in the labor market. And I don't know what that will require in terms of increased unemployment, your question. I do think there are a number of dimensions through which the labor market can soften. And so far we've got, as I mentioned, in goods, we have inflation moving down without the softening in the labor market. I think most forecasters would say that unemployment will probably rise a bit from here, but I continue to think that there's a path to getting inflation back down to 2% without a really significant economic decline or a significant increase in unemployment. And that's because the setting we're in is quite different. The inflation that we originally got was very much a collision between
I think they're going to hold the price around here, folks.
And hard supply constraints, not something that you really have seen in prior, in prior business cycles. And so now we see goods inflation coming down for the reasons.
Spread is not expensive, folks. On a SPY, 1 cents.
Housing inflation will come down, and I think
SPY. Today I was trading SPY, not the SPX.
Non-housing services sector soon enough. But I think there's ongoing disinflation, and we don't yet see weakening in the labor market. So we'll have to see. Certainly possible. Yeah, absolutely, it's possible. It's a question no one really knows. I think it's because this is not like the other business cycles in so many ways. It may well be that that it will take more slowing than we expect, than I expect, to get inflation down to 2%. But I don't. That's not my base case. My base case is that the economy can return to 2% inflation without a really significant downturn or a really big increase in unemployment. I think that's a possible outcome. I think many forecasters would say it's not the most likely outcome, but I would say there's a chance of it.
Michael McKee from Bloomberg TV and Radio. I'd like to pick up on what you were just saying about a substantial downturn and ask, with the full weight of your tightening not in place yet, and with the progress against inflation,
MACD bearish.
A lot of talk about very
the bull
slow
territory
growth going forward in 2023, and the recession indicators are all suggesting that we are going to see recession this year. So I'm wondering if you've changed your view, or you have a more nuanced view of what you think the danger to.
We touched down 410. That's the target.
And whether you're very close to perhaps tipping it into the wrong place, which calls for more restraint on your part.
So I do think most forecasts and my own assessment would be that growth will continue, positive growth will continue, but at a subdued pace, as it did last year. We had growth of GDP growth of 1%.
Squeeze building in.
Final sales growth, which we think is a better indicator of about 1%. I think most forecasts and certainly my assessment would be that growth will continue at a fairly subdued level this year. There are other factors, though, that need to be considered. You will have seen that the global picture is improving a bit, and that will matter for us potentially. The labor market remains very, very strong, and that's job creation, that's wages. As inflation does come down, sentiment will improve. You also, state and local governments are really flush these days with money, and many of them are considering tax cuts or even sending checks. So I think that's going to support. They're also spending a lot. There's a lot of spending coming in the construction pipeline, both private and public, and so that's going to support economic activity. So I think there's a good chance that those factors will help support positive.
Wants to go higher. Market wants to go higher, folks.
Is that there will be positive growth this year.
Rich Miller from Bloomberg. First of all, how are you doing?
Fine, thanks. Fine.
Good. Second off, I think earlier on in the press conference, you said you need to see substantially more evidence.
Market create a diversion here and then sell. Something would happen here.
3 months, that we've seen 3 months in a row. Governor Waller suggested he might want to see 6 months. Is it just the inflation data, or do you have to see the labor market coming back into better balance to have that substantially more evidence?
So I don't think there's going to be a light switch flipped or anything like that. I think it's just an accumulation of evidence. So of course we'll be looking, by the time of the March meeting, we'll have 2 more
market want to go higher
reports, 2 more CPI reports, and we'll be looking at those carefully, as all of us will, and we'll be asking ourselves, what are they telling us? And soon after that, we'll have another ECI wage report, which, as you know, is a report that we like because it adjusts for composition and it's very complete. And the one we got, I guess it was yesterday, was constructive. It shows wages coming down, but still at a high level. They're still at a level that's well above where they were before the pandemic. So I don't want to put a number on it in terms of months, but as
I'm
the
out of my put,
accumulated
folks. Okay,
evidence
looks like market want to go higher.
It's going to be reflected in our
Took a
assessment of the outlook.
took a 15-cent loss.
That will be reflected in our policy over time. But I will say though,
42% loss,
it is our
but I
job
only
to
put my 10%
restore
profit into
prices
this
to
when I was
2%
trading.
inflation for the benefit of the American public. We're not, market participants have a very different
They want to
job.
go higher.
It's a fine job, it's a great job. I did that job for.
I feel like, okay, that's the reason I want to wait.
in one
I
form.
wouldn't mind buying
But,
something.
we have to deliver that, and so we are.
I want to see the MACD crossing or not. If not, then I'll enter back.
Complete this task because we think it has benefits that will, support economic activity.
Look at the cloud here.
Public for
Wants to
many
go higher.
years.
Thank you, sir. Thank you, Fed Chairman, for taking the questions.
George, how did you know that?
We had solid job growth. Everyone's from Fox Business, by the way. We had solid job growth, a slight fall.
That could be a divergent too.
It seems so far it's been relatively mild from the economy to go from a 9.1% CPI inflation to a 6.5% CPI inflation. Is the hard part yet to come to go from 6.5%?
Squeeze building, they want to go higher.
I don't think we know, honestly. So we, of course, expected goods inflation to start coming down by the end of 2021. And it didn't come down.
That is your divergent too, but they want to go higher.
It's come down pretty fast. So I would say this is not a standard business cycle. When you can look at the last 10 times there was a global pandemic and we shut the economy down, and Congress did what it did and we did it. It's unique. So I think certainty is just not appropriate here. Inflation, it's just harder to forecast inflation. It may come down faster. It may take longer to come down.
What do you think of Chevron? Looks really solid for bullish.
Yeah, but right now FOMC going, and I'm not gonna go in Chevron because you're not gonna make much money to already. I don't make much money if I want to try Chevron because it's a pump. Right now is everything goes up when this goes up. So I don't trade stock right now. But I can look into what's the symbol?
We just see that it has to spread through the economy. And that it's
For Chevron?
Yeah, CV.
CVX, I think.
So again, my forecast,
CVX.
my colleagues, as you will see from the S&P,
Chevron giving up.
many different forecasts, but generally,
Chevron give up.
it's a forecast of slower growth.
Chevron
some
getting
softening
weakness now a
of
little bit.
conditions, and inflation moving down steadily.
Today, every stock is down except the oil stocks.
If the economy performs broadly in line with those expectations, it will not
So-
be appropriate to cut rates this year to loosen.
I like to focus where the iron is hot.
Other people have forecasts with inflation coming down much faster. That's a different thing. If that happens, if inflation comes down much faster, then we'll be seeing that, and it will be incorporated into our thinking about policy.
Thank you, Chair Powell. Simon Rinovich with The Economist. I may ask a further question about the language around ongoing increases. That, of course, implies at least 2 further rate rises. If you look at Fed Fund futures pricing, the implication is that you'll raise rates one more time and then pause. Are you concerned about that divergence, or do you think if everything breaks right, is that a plausible outcome?
I'm not particularly concerned about the divergence, no, because it is largely due to the market's expectation that inflation will move down more quickly. I think that's.
What did I say, folks? Wants to go north, right?
So again,
Yep, they want to go north.
Our forecasts, the different participants have different forecasts, but generally those forecasts are for continued subdued growth, some softening in the labor market, but not a recession, and we have inflation moving down, into the somewhere in the mid-3s or maybe lower than that this year. We'll update that in March, but that's what we thought in December. Markets are past that. They show inflation coming down in some cases.
I mean, a call. I paid a $1.12 on a 412.
Different view. It's a different forecast. Really.
Strike.
Given our outlook, I don't see us cutting rates this year if we get our outlook turns true, as I mentioned just now.
They're gonna try probably 412. A pullback. I don't know. It's a diversion here too. I mean, MACD crossing too, bullish. But hey, let's see.
One of the changes in the statement this
Look at that.
month is that the committee is no
Look at the market broke through the roof, right?
data points you'll consider in assessing
That's it. They want to continue. They will continue here. Big candle pop, and tomorrow everybody will be talking the town. Market wants to go to the moon. I don't know.
The general sense of it. Look, we
That
understand.
could-
I personally
This
understand
could be
well
divergent. I don't know.
that, COVID is still out there, but that it's no longer playing an important role in our economy. We kept that statement in there for.
Okay.
We would take that as a perfect time, but we thought that people are handling it better, and the economy and the society are handling it better now. It doesn't really.
Now market might sell off.
In the Fed's monthly post-meeting statement as an ongoing economic risk, as opposed to a health issue.
Hi, Chair Powell, Nancy Marshall, Dancer, with Marketplace. I wanted to go back to another thing that Fed Commissioner said. She said she doesn't see signs of a price
Pulling back.
spiral, and I'm wondering if you agree with that.
I do. Yeah, I do. I don't see that yet, but the whole point is, if once you see it, you have a serious problem. That means that effectively, in people's decision making, inflation has become a really salient issue, and once that happens, that's what we can't allow to happen. And so that's why we worry that the longer we're at this, and the longer people are talking about inflation all day long, every day, the more risk of something like that. But no, there's not much. It's more of a risk. It always has been more of a risk than anything else. By the way, I think it's becoming less salient, and people are. We pick that up in conversations, and I've seen some data too that show people are, gradually. They're glad that inflation's coming down. People really don't like inflation, and as we see it coming down, that could also add a boost to economic activity.
I took a 6 cent loss. I'm out.
Surveys now, they're very, very low, with 3.5% unemployment and high wage increases.
Yeah, 5% loss.
Why can that be? It has to be inflation.
Look like you never know. MACD is.
Once inflation is seen,
Look at the MACD.
in coming months, even you will also see a boost.
Maybe overextended.
That's at the very heart. Is consumers and businesses that essentially we believe that expectations of future inflation are very
Tesla 182.
The process of creating inflation. That's a sort of a bedrock belief. In one way or another, it has to be. We think it's important. And in this case.
Oh yeah. WB wants to go.
Risk 8 months ago or so.
MACD. That's your divergent. That's your divergent, folks, right there.
We moved quite vigorously last year. Expectations are seem to be
56.
well anchored, including at the shorter end now, not just the longer end. So it's and I think that's very reassuring. I think markets have decided, and the public has decided.
Man,
inflation
interesting
is
to watch.
2%, and it's just a matter of us following through. That's immeasurably helpful to the process of getting inflation.
Look at this.
The fact that people now do generally.
So this is
believe
not.
that it will come down. That'll be part of the process of getting it down. That's a very positive thing.
MACD is crossing. Look at that.
Thank you, Chair Powell. Greg Robb from Market Watch. In the minutes of the December meeting, there was a couple sentences that struck people as important. And the committee said participants talked about this unwarranted easing of financial conditions was a risk.
56.
And it would make your life harder to bring inflation down. I haven't heard you talk much about that today or in the statement, so I was wondering, has that concern eased among members, or is that still something you're concerned with? Thank you.
I would put it this way, it's something that we monitor carefully. Financial conditions didn't really change much from the December meeting to now. They mostly went sideways or up and down, but came out in roughly the same place. It's important that the markets do reflect the tightening that we're putting in place. As we've discussed a couple of times here, there's a difference in perspective by some market measures on how fast inflation will come down. We're just going to have to see. I'm not going to try to persuade people to have a different forecast. But our forecast is that it will take some time and some patience, and that we'll need to keep rates higher for longer. But we'll see.
Hi, Chair Powell. Brendan Peterson with Punchbowl News. I wanted to ask if the Fed takes into account at all the debt ceiling when it comes to quantitative tightening, given the fact that rapid or faster quantitative tightening could bring us closer, faster to that drop dead debt ceiling deadline? Could it play an effect as we get closer to that drop dead deadline this summer?
Look, it's very hard to think about all the different possible ramifications, and I think the answer is basically I don't think there's likely to be any important interaction between the two, because I believe Congress will wind up acting, and as it will and must in the end, to raise the debt ceiling in a way that doesn't risk, the progress we're making against inflation and the economy and the financial sector. I believe that will happen. I believe it will happen.
I mean,
we of course will
35 cents, 408 put.
Carefully, as the process moves on. For example, the Treasury General account will shrink down.
Now this is a 410 area. They might bounce up, down, they will do, God knows. But diversion is confirming that's the
We
reason.
understand all that, and we're watching it carefully. We'll just be monitoring. Thank you very much.
Alright, takes it taken. Jerome Powell is done. Gone. Alright, diversion, I announced. Man, look at that, folks. Did you see what exactly happened today, market, folks? Let me explain you how did I know that market gonna go to 410 today, and I want to trade it at last minute. Did you see all day today what market was doing? Every garbage was going up, and I say, hey, every garbage is going up except Apple, Google, right? Tesla, all these, Amazon, everything was going down. Microsoft, all these were down today. So I said, hey, they're gonna use it as a volume button. I said so, right? They're gonna use it as a volume button, and guess what? That's what they did, and this is how we print money today, right? Oh boy, look at that. Let's print now. 45. Okay. Anybody had a fun today? Look at this, the support right here.
Yeah, I tried to buy it, but too big spread, so I didn't buy anything. Yeah, just watch. Too happened too fast,
Yeah.
Can't trade like that.
Super fast, exactly. Agree with you. They go everything super fast, man.
Because if you just look away from the screen for 2 seconds, and you'll be losing $200 in seconds. So I don't want to do that.
Agree. They're gonna bounce, do all the dramas and everything. I like to take the profit, but man, these people are bouncing. Ticks are going up because these people are loading up the put. That's why. They're gonna go one more leg up. Caravana popping.
Yeah, I really wanted to play Strangle, but I got too late.
I don't enjoy Strangle, folks. I tell you that, but I like naked, man. I like to play with the fire, so that's what I did. Strangle was just for fun, just to try out.
Well, Strangle is only for the one-time things. You don't play that every day. It's just today, you can play because it could go either way. So.
No, I played today expiry in a 0DT, buying the calls and buying the put both and see what happens. One side it almost 200% went, and the other one was maximum loss is 100%. Right, one side can go to 300%, but other one can only go 100% loss. So I thought, okay, let me try, see what happens. And literally, it printed good money.
If you're getting on the right
But
time.
only for FOMC time, okay? You cannot play regular because
Yeah, you
FOMC
cannot, right.
FOMC is the momentum where they do that. In that time, you can do.
I think it was the right time when, I think at 2:30, right at 2:30, like shoot up, boom, boom, boom.
Carvana looking good, man. Carvana is, look at that. Agree with you. I don't know what's going on with the Carvana, man. Head and shoulder pattern they are forming probably. Let's see. I bought a Carvana $14 strike, $1.40 just to try out. This is your head, this is your shoulder, this is your shoulder. This is the support line breaks, then I will be interested to more. Let's see. What's cooking on Carvana? I want to exit, folks. Now, you think Carvana they're gonna take it up? Look like, right? Alrighty. I want to focus on my SPY, folks. Okay, I'm really interested in SPY. Carvana can go to $15 today. This is your support. If this support breaks, baby, gonna roll. They're not gonna go anything right now. 3:30, right? 30 more minutes to go. Jacob, sorry, we're breaking the support. Yeah. Let's see what market agenda is out here, folks. We are at the 410. Market, they want you to feel that they are bullish, so they're gonna compress probably. I don't expect too much, maybe later. But look at this strong support, folks. So they will little pull and then again bounce, something like that they're gonna do. I feel like that strength is there. They're not gonna give up like this. They know not. They want to go higher. I feel like that they want to go higher. So I'm not expecting any crazy sell-off. The power is there. Squeeze coming in. MACD is super bearish. Divergence is super there, but beads are holding. You follow what I mean? Beads are holding. So they can pop. Look at this. All the EMAs are not even lined up yet. So bounce is coming. That's what I mean to say. That's the bounce I was talking about. 25 cents. Probably, yeah. bullish. What are day market swing today, right? Crazy. You just need to catch the right side, that's it. You just need to catch one or two right side, that's it. You don't need to go crazy anything in the market. Market creates so much drama. Man, Caravana is going, SPY is going. Last 10 minutes they're gonna change the direction. They're gonna change it. Until then they're gonna hold all the prices, folks. Okay, because they put a lot of effort. You think everybody gonna they know that everybody gonna short now, right? And they're not gonna go down. I think so. That's what I'm thinking. Because they're gonna hold the price to burn out the premium. Waiting for a one down if something goes down to exit. Look at the strong. The MACD is the only one is showing the bearishness. Yeah, they want to go north. See that? 25 cents, 22 cents. I'm out of my put. Again took a loss of 15 cents. $42% loss on my put. Just slowly taking up. MACD, if the MACD cross is bullish and go and test the supply. That's what it looks to me. So maybe last 10 minutes I will trade if something happen, real confirmation I need. $59. MACD trying to cross and they want to go north. US 10-year treasury fell to 15 bips, yeah. MACD trying to cross, market wants to go higher. Look at the strong bid. Last 10 minutes. What did I say? They're going to go right there, man. Look at that. And MACD trying to cross. Going to be bullish today. 68 cents. I'm looking at the 412 calls, looking at it. Let's see what happens.
Which calls?
412. I looking at it. Okay, I didn't say I'm entering into it because we are the supply zone. So if there's rejection, then I'm not gonna go. But if it breaks out right there, I'm gonna press the button. Because we are at the top. Market is already 412 right now.
Has to break which one?
This resistance got to go to bullish. Otherwise, they are just trying to get squeezed all this bear. That's the reason they did this. So I need to identify the agenda here. See what their plan is here. The squeeze is building in, but that was the divergence pullback. Strong support of the cloud. So I don't expect too much sell. So look bullish, but I want to see last 10 minutes they're gonna do some drama. So I want to see what drama. Snap looking good. Snap is Carvana 153. I need to focus on SPY, folks. Okay, just let me now focus. Something gonna happen here. Snap is right there. Yeah, Snap is, I told you in the beginning, man, these people will take it to all the way. Look at this. See that? They broke now. Snap is looking good. I agree with you 100%. Snap is good. They want to take all the garbage. Or a car wanna give up, man. Theta decay is 36 cents. Okay, SPY going. I told you when they want to break. Okay, 408. $0.80. I'm out of Carvana. $0.05 profit. I don't like that, man. Alrighty, 80 cents I'm in on a SPY call, same one. Boom, look at that. Nice breakout, right? Heading to print crazy money today. Let's do that. Woohoo! See, this money can print more than anything else, folks, right now. Look at that. 35% profit. Wow, look at that, folks. $1.30. I'm out $1.28. Anybody played this one? Huh?
Yep, I got it.
How much did you print?
Let me get the percent right now. Hold on.
Yeah, tell you what. This is awesome, right?
Yeah, man, I took that one up.
I took 48 cents.
I went small. I went one contract, but I'd like to see it win like that.
60% I print. Man, this is amazing. Let's go back. 76 cents. Okay, I mean 76 cents on a 413.
I hit 100 on that, Josh.
Man, nice. What you enter early?
Yeah, I think 410. Right when I think I took at the same time as you, but I just caught some really nice market sell.
Okay, 76. We are heading to, I think 415. I think we're gonna go today. 415 is that's the number. So
damn, I should have gone back in here.
we're gonna be in the money. This 413 become in the money. You watch. Yep, right there. 413 in the money. Yep, in the money now. Look at that. Another 30%. Wow, look at that. 25%. Give me $1 right there. Told you, man, they're gonna go now in the money. That's it. I'm gonna hold in this. Yep, 30% profit. Still holding it. Let's go. $44% profit. Did not book yet. I want them to go to 415 probably. 415. Too much greediness is not good, man. Man, look at the ticks are ticking down. Filling up the gas. 1700 ticks went there. Oh, boy. Pull back. This is not good. Pulling back. Ticks are going down. Let's see. Playing games here. Ticks are going down. Pressure is downward. 76. I'm out 75 cents. Took a 1 cent loss. The reason behind it ticks is something is cooking right here. Pressure is coming down. Too much parabolic move. Oh yeah, tick turning. Tick is turning. I think still bullish, man. They're gonna go and finish the line. Feel like there's something is gonna do. Oops. There's a VIX. Look at the VIX. They took it down to $17, 17.16. So gamma is 17. What is this? 30, 45 cents. I'm 45 cents I paid on 414 call. I think they're gonna take it to 415 and you'll become in the money and print a big money. I'm telling you folks, that could print today. I can see that. I'm loving it, man. This is how become a let's do, man. Look at these ticks, man. Because 1,000 already. Come on. Giving up. At least take it to 414. They're gonna pull back something and then they will do another 15 minutes to go. Too much overextended. That is true. $0.25. $55. Man, this thing is not moving, okay? Rejection coming, I'm out. Took up 4 cent profit. 49 cent out. Look like they're gonna pull back because we had little, 15 minutes to go. See that? Yes. They're gonna pull back and then I will enter again. Something is happened. Let's see how much they can pull back. Oh, see this? This is what I was expecting. Something they're gonna do. And then we can print more. Yeah. And now reversal comes. I'll get in 57. 413. Yeah, look at that. Because overextended line is all the way here. 50 cents. 400. Let's see agenda here now. $62. $15 minutes to go. Market. Snap is always bullish. Snap is super bullish. Oh, MACD cross now. Okay, so 413, 61 cents. Okay, I mean 61 cents. 413. Still, I think it has a room to go down because of the MACD. This bullish cycle, this is bearish cycle, they might go lower most likely. Then they'll bounce. Yeah. Another 5-10 minutes go down, I guess. Hold on. Take them one loss. $0.50. Took a 6-cent loss, I'm out. They're gonna test this. Folks, today is a financial fundamental class at 6 o'clock. Those who want to enroll, just let me know. 6 o'clock.
What's the info in that class again, Josh?
It's all about like anything you swing trading, anything you investing, right? That will give you how to find out the stock value is right, the price we put it into, any price you want to buy in. You always need to see that value is right or wrong. So 30 cents, man, look at that. Let me get in. 1 second. I want to look at interesting now. Look at that. We can bounce from here. 67 cents, 412, or we go down. That's what I need to see. Really want to go. Ticks 1,000 now here, and this market is really selling off, or market gonna hold. That's what I need to see. Ten minutes left. 62. I think they could bounce, man. If they bounce it from the support, we complete. Yeah, they want to go lower. They want to go lower ticks. This is the line. I need to follow this. Now what happens is it breaking down. Mm-hmm. 55 cents. Let's see over here now. Battle going on 55. Let's see. 48. There is no price or control area or nothing. Follow. Okay, they want to go lower. 75. Okay, I mean 35 cents. 410 put. That's the major support, man. These people broke. Not major, I mean it's an intraday, right? Whatever you're trading. MACD looking super bearish. We got a strong support out there. Baby wants to go. Look at that. What did I say, folks? These people gonna do crazy thing, right? 15 cents right there. One more leg down, we can print. One more leg down. Come on. I think you can do it. Right now, 40% profit. Let's do it. Bouncing, man. Forget about it. At least they need to go back to the 410. 8 minutes to go. Look at that. Come on, let's go. Right there, 50 cents. Go. One leg down, man. I'll bet you, man, we're gonna print good money. Right there. Yup. 51. 60 cents. Give me. Wow, look at that. Woohoo! Nice. 80 cents. 61 cents. I'm out 60 cents. %70 profit, 71% profit. Folks, I knew that something gonna happen here. This is critical situation, whatever it did that, and it's a crazy money here. You just need to know how to trade this, man. If you know this, you can print big money. Only thing is like a couple of things need to apply, because that was the right there, the demand rejection, support line there, rejection, confirmation that they want to go, and then the tick was given, say I want to go lower. That's the reason I thought this one would do. This is the beautiful. Okay, now expect a bounce a little bit probably. The VWAP, but it's 10 minutes left. 6 minutes left. They want to go lower, man. They really want to go lower still. 62 cents. 58 cents. I mean 58 cents. 410. Oh, look at the ticks. Woohoo! Gonna wash me out. Let's see, 5 minutes left, 6 minutes left market. I said there is a bounce coming in, but let's see what happens here. These are all the EMA not lined up yet. But it's only 5 minutes left. Market to close. Look at the ticks. They want to bounce. Oh yeah. Forget about it now. $40. I think filling up the gas. Yes, filling up the gas. Jerome Powell must be thinking, man, this market is like way ahead of me, look like, huh? Yep. Let's go Tixa. Look at the price over here. All the EMA not lined up yet. But let's go. $410. That's the area market closed. I think market will close around here, folks. $410. $410 area. Have you ever seen the Fed rate rise and the market goes flying high? It's exact opposite, right? Market should be flushing, but that's the agenda. Market had it. I figured, man, the way the Apple was going down today, and I said they're gonna use this volume button to take it up. I figured that's the reason. Well, anyway, they don't want to go anywhere. This is just compression here. Burning out premium is just nothing. 25 cents. Two more minutes to go, market to close. 1 minute to go, 30 cents. Okay. I'm out 27 cents. 53% loss right here from this to this. Alrighty, market close, folks, just now 4 o'clock. All right, so right here. All right, so folks, what happened today, right? You saw that what exactly happened here. Just to give you an idea here. When remember the morning market was going down here, Apple was going down, and right, everything was going down. Even Google was going down. That's why they were using the volume button. They wanted to play the volume button. And that's what they did, and then took it up. Then guess here, look, the market went down. I said, okay, this is the landmark. We went up, we shorted, test this, exited here, and look at this, and then look at that, they took it up. When we broke this, look at that confirmation breakout right here, today's high, boom, boom, boom. That's your confirmation. Look at that print money, right? Look at that, and then we again pull back, and then look at that. So all these play. It's like a easy to identify the agenda behind. Look at the market, 410. That's what I said. Look like 410. They're gonna go. Okay. So we didn't trade since morning anything until the Jerome Powell, right? And then we started the fun. Now trading like this is, folks, you just need to be a little patientful. You need to be very, very fast and identify the event. What I just said is, when you want to trade, you got to be very quick sometime. Depends on what side of the aisle you are and where how the movements are. All right. So folks, today we will have a class right here, financial fundamental, which would be 6 o'clock right here. Okay. Send the number. This is the number. If you want to enroll for it, let me know. All right. How was your day, folks? Anybody had any good day?
I finished 4.5% up on the account.
What did you do, you said?
I finished 4.5% up on the account, so I'm happy.
Okay. That's good. No, I do not, folks. I do not follow the Fibonacci. The reason behind is Fibonacci is just speculating, and for me, I like to not to speculate, folks. Avoid speculating things. So that's why I don't follow that. Oh, you are asking me about the financial fundamental class, right? So normally what happens is whenever any company you want to invest into it, and we based on the earning, we just look at, this company is the best company to go and invest, but not based on the earnings, just like looking at their EPS and looking at their fundamentals, and we think, this is the best. No. Sometimes if the company is poor performing, then you would know whether the company is poor performing or not because of the stock. Apple is 180 and right now is 135. Is this 135 cheaper or 185 was the cheaper? How do you know? So like I said, when I was giving the class, I said, hey, 135 at that time is expensive than the 185. So how do you know that? That's why you need to financial class that teaches you that how to identify all those things, because you need to know the financial fundamental of the company. Otherwise, they're gonna fool you looking at the headlines and whatever the earning comes out. Say we beat the EPS, we beat the revenue, right? The revenue, many companies have a crazy revenue, but you need to look at the in-depth analysis. That's how you come to know whether you want to invest into the company or not. Otherwise, the price is speculative. The price what we see is all speculative price. So you need to look at the company growth. This is all these things I'll try to cover in the classes. So that way, in any time you want to invest into the company, you will not be get fooled like Carvana or anything, right? If Carvana at the time was 285, somebody would ask me, I said I would not give a $10 at that time. But then after 280, it went to 380. Then people think Josh is wrong. But no, I was right. Same thing, many companies, including Tesla. So including Apple also, including Google also. So that's how you know how to identify. That's the class. That's how you would know, would help you. Okay. I was down 50% today on a bad trade. Then I caught the call, trend push, J Powell made back the 50%, 100% gain. Good job, turn. Okay, that is good, man. You just need to wait for it. Going early is not a good idea, folks. I know you become impatient, right? But going early is the bad idea. You just need to wait for let the direction decide, right? When market was going here is when we were
Meta's going crazy
right now. Meta 180, 165. Earning just came out. Okay, wait. Meta earning came out. Meta is 16 time P ratio. That's why Meta is going crazy. Oh man, I didn't expect that they could beat the CN. Undervalued stock. That's why Meta going crazy. Meta quarter revenue 32.1 billion. Revenue beat. Meta beat the revenue and is undervalued. Let me see if if I see the EPS.
I got a 162.5 strike price for this Friday on Meta. Hopefully, price stays up there.
Nice. People say Meta. Yeah, Meta is the EPS. What the EPS came out? That's one. $172 heading to 180. That's what is going to happen to Meta. Meta is super undervalued, 16 time P ratio. That's why. Everybody want to buy Meta cheaper. Yeah, Meta is 172. Wow. Who else is earning has it today? Let me see. Right here today. Meta, McKinsey, Aflac, Elf, all these MetLife, Allstate, Times. Crazy Meta right there. ALIGN running. Let me see. Meta running to 180 watt. Or Meta announced they're gonna buy back 10%. $40 billion buyback. $40 billion buyback. Wow. Yep. Because dirt cheap, they know that. They need to announce something. Right there. Are you doing technical analysis today? No, intraday or regular. Today is a financial fundamental class, folks, right here. Sorry, this one. This is financial fundamental. Today is financial fundamental class. Financial. So if anything you want to invest into it, that would be the one. Okay. Okay. Anybody has EPS? Let me see. Okay, right here. So, oh yeah, man, big time miss Meta. I told you on my video, right? I said that big time miss Meta. Okay. I'm trying to tweet so people. Okay, Meta, I just tweet about it, folks. So they missed the revenue big time, $2.26, and they got it $1.76. So they missed the big time, but they announced the buyback program. That is the reason the stock is going up. Because its PE ratio is only 16 times, right? 16 times. So it's very undervalued. But if you look at the Tesla, PE ratio is 36 times, 36. And Meta revenue, if you look at the Meta net income, is almost like a 25 billion yearly, whereas Tesla net income is 12 billion, less than half the size. And Tesla is right now trading at 36. Imagine how much cheap the Meta is right now. That's the reason. Okay, that's what they announced. So all these financial fundamental class, you learn everything, folks. That's what I say, folks. Take the classes on today at 6 o'clock. How can I do tonight with you? What is it? How can I do Quantum? Come on, like for joy. Yeah, come on. Likes, like, yeah. How can I study with you? Meta will destroy so many shorts. No, Meta right now, folks. Shorts are already started buying. They already shorted. They already made the money. Now they are buying back the Meta. All these Nasdaq stocks, many cyclical stocks, right? All these stocks they are buying back right now because in last year they shorted. Now this year they have to buy. They take a tax loss, right? Whatever would be they have done it. Now they will be buying back this year. That's why all this, and we all become bullish. They will take it to the market for 50 something like that, and we think market gonna go to the high, and then they will dump it. That's how they champion doing that. Yeah, that's the thing they will do, man. Okay, what else? Anything? Find my other screen. Let me see if I found anything. Armstrong said, oh, the CEO of the coin selling his shares, 29,000 shares. Wow. Man, these people are champion. Look at the folks. What did I say on yesterday video about the Meta? Could go to 181 right here. Can you believe it, folks? Look at the my video, what I said yesterday on Meta. If these people go, if they want to take it up, they'll be 182. That's the target I put it in. Wow. And I said EPS will miss in that video. EPS would miss. Look at that. I'm gonna go and I'm gonna post it. Display Meta. I'm gonna tweet that. Let me add that and send it. Okay. All right, folks. With the same here, yep. Okay. You bought a call at 170. Meta. You're gonna print Meta right here. Let me see. Those who bought a Meta call. But yeah, in the morning you got to see this. 40. Right now. Oops. They have the implied volatility is 150%, so they can tomorrow bring down to 60, 70, something like that probably. So watch out that. Okay. And still people will make some profit because it's quite a big jump. Yeah. All right, folks. No. Okay. Okay. Yeah, slowly market is recovering, folks. Thank you, Matt. You are amazing too, man. Thank you for your good day today, home run. Matt, really home run? Good. Only thing is just to limit yourself, not to go crazy, and limit yourself and learn, folks. Yeah. Today is crazy day. Oh boys, folks, student is backing out. One of the students says can we do other day? Okay, let me find out, see if I can, how many people are there. Boston, Nick, let me see. Folks, we can do option class if anybody want interested. Now it's too late, but if anybody want to do option class, let me know. Because financial class today, the other student says he wants to postpone because he's from California. He has some work to be done at work. Okay. Okay. Folks, I don't know, hold you up here, folks. Twitter. I really appreciate, folks, guys. I hope everybody had a blessed day today, and see you guys tomorrow. All right. Thank you. I would like to join option class. Let's do it, option class, folks. So let me see if anybody want to take option class. Let me see. Okay, I would like to join option class. Sure. Remember, send me message if you have taken the classes before. If not, you can enroll for it. You know what to do. Then somebody else was asking me today option class. Who else? Let me see. And this changes happens last minute. Okay, so now, okay, folks. Satish Kumar, Josh, thank you, Josh. It was an awesome day. Played Tesla, Carvana, Amazon, Meta. Man, you all over, Satish Kumar. Good job. That's what it matters, man. Matt, you said my brief home run, my first home run, our brief conversation on phone yesterday helped me a lot. Thank you, Matt. No problem. As long as it helps you, man. People need to, you like it, right? Good. Alrighty. RC, if you want to take a class right here, you can enroll. Right, this is the number to send me message.
Hey, Josh, got your text. Thank you.
No problem. Hey, thank you, man.
It wasn't working out for me too well. Anyways, I had football practice tonight, so I thought I was semi-pro team, and I was like, I really wanted to take the class. So I was like, man, I might have to skip practice.
Okay, no problem. Take it easy. Enjoy. All right, guys. See you guys tomorrow then, 9:30. Thank you, everybody. Enjoy your rest
Thanks
of
so
the
much.
evening. Yeah.
Bye.
Thank you. Bye.